it would be impossible to have a conversation on ethical investment without talking about greenwashing. And a colleague of mine, Nick Carter, is very involved in this because for those who are, I don't want to use, like, for those who pay a little bit more attention to what's going on, there's a little more savviness going on with the beef movement, for example, well, beef industry. And there's a lot of greenwashing there with just eco beef in general, regen agriculture, which is undoubtedly a huge step in the right direction, but the math just does not add up. The land is not that much available, water use, etc., things that we don't need to get into necessarily here. How big an issue, you guys both work in this space. I mean, it seems like there's only so many options for us, right? Especially if you want to keep your risk without, going too crazy and just like, funding your cousin's vegan, I don't know, jam company out of the garage. So how worried, like how much where do we look as individual investors to sources to trust or to, avoid being greenwashed? Or is that just something that is inevitably happening across the board? Like, do you have any tips for us there? We can maybe start with you, Tim.
Sure. Okay. So yes, greenwashing, huge issue. There's so much marketing, let's absolutely, this is a problem. But also what I want to kind of go back to what Kelly said at the start, which is there is no such thing as a perfect portfolio. Okay. So the way I approach this is that there are a wide range of options. And thankfully now there are options. If we had this conversation 3 years ago, I would have been like the only option I had for my vegan clients then was like a pie chart that was so complex, like I don't even want to get into it. We pulled it off, but it was like way more complicated than it should have been. Now there are such easier solutions. Everything from what I would say a small step in the right direction. And these are going to be the quote unquote greenwashing funds, right? Because they very much track the standard benchmarks, but, maybe get rid of a few small things, maybe have proxy voting guidelines or do a little bit of ESG integration, all the way through to what I call like the crunchy granola approach, right? Which is going to be like completely divested from any company with animal testing or anything like that. And then as well, on the doing less evil but also doing more good, like a really cool option for people in Ontario that they can look at is an impact investment called the Fair Finance Fund. This is about supporting local social enterprises in the food system here in Ontario. It only pays 2% return. Right? So there's going to be this trade-off that as you go across the spectrum, by definition, as you become more sustainable, you're going to reduce your diversification, right? Because on purpose, you're like avoiding investing in things. Good chance your fees are going to go up, right? Because the more sustainable ones are often a little more expensive. And that, that sometimes there are going to be products like Fair Finance Fund, which the impact is like undeniably amazing. But the financial return for the risk that you're taking isn't great, frankly. So, really it's up to every single person to figure out where they are on that spectrum. And this is my job. I've stopped telling people what to do. When I started in this field, I was kind of like a lot of vegans, I think, coming into this, where I just wanted to tell everyone, this is what you need to be doing. And of course, everyone should be divested, and I got tired of doing that. And so now my focus is meeting people where they're at and helping them take that next step in the right direction. And so when I meet with a client, it's really about, okay, where are you on the spectrum? Let's help you take that next step to get you where you are. Some of my clients are on the crunchy granola side, and then I'm the little angel on their shoulder that's like, don't take too much risk. Like, don't go wild with this, like be prudent because this is your retirement nest egg, right? But I want to be clear, there are now a range of options. And I really think it's up to each person to like be intentional and to decide and to make these decisions, understand the trade-offs, and then figure out what makes the most sense for them.
That makes perfect sense. It's funny because when I hear you guys talk about it, it seems very reasonable. And then I'm one of these people who, when I don't talk to you guys, I'm like, I don't know what to do. So I know we're coming up in time, but some quick lightning round questions, one of which came from the audience. So we can start there and we'll try and keep them brief. But, Kelly, we can start with you. But somebody asked actually just basically, very bluntly, in your opinions, which companies are the companies to watch right now?
That's a great question. I think it depends on what kind of, from an investment perspective, the companies to watch, I would say, are Impossible and Just. and they're going to IPO soon. And just to piggyback on the last question, if you're not sure what to do, I would say if you're looking at public equities, follow the trend a little bit. Don't jump in. There are publicly, available companies. Very Good Butchers, right? They IPO'd last year. I think that Just and Impossible are probably going to very shortly. I'm not a financial planner or an advisor, so I don't take my advice. I would just say it may not be good to put a lot of money on the day a company IPOs, perhaps watch it a bit. But the good news is there are companies to watch. After that, I would think keep an eye on Mosa Meat, Memphis Meats, that cultivated meat companies that are coming up that I think are going to commercialize and IPO in the next 2 years. Keep an eye on those.
Absolutely. Tim, do you have any to add there at all before we continue later?
There's one company, it's just been on my radar for a little while. I think it's like a Danish company, Christian Hansen Holdings. They've been around for a little while, but they often, it's kind of a little bit up the supply chain, but they produce things like that replace preservatives in food and enzymes and probiotics instead of antibiotics. And they've been around for a little bit longer. I would agree with Kelly, just that, there are some really cool companies right now, but especially around IPO, initial public offering, it gets super volatile, and even the company could do really, really well. But if you buy it at the wrong time, right, it can be problematic. So I would just be really cautious. I would advise people to be really careful for these things, maybe carve out part of your portfolio. And on the diversified side of things, there is an ETF I like. The ticker symbol is AGSG. It's the AGF Global Sustainable Growth Opportunities Fund. And it's just super diversified. It's got renewable energy, clean tech, energy efficiency, water, and it's also got, some of these health and nutrition companies that are a little bit more on the sustainable food side. So it's not specific. It's not like a niche thing for this area. But again, it's a fund that you can buy that has some of this in addition to other companies. And, it's not a bad idea. What I love about ETFs is you can download the full list of holdings. So people can actually download in that list of holdings and kind of go through them. And there might be some other companies that Kelly and I haven't mentioned.
Yeah, actually, the Rethink report that Kelly mentioned, this is something I think a lot of people think about, including myself, and there's a disconnect. It's like you see or hear about a cool company that's going to be doing cool things, which is happening all over the place in the vegan sectors, right? Between materials and all proteins and other products. But is there anything somebody can do? When you hear about that report Kelly brought up, Spyber, which is a company working with North Face to make fleece and jacket materials that's using a spider silk they're synthesizing that's 30 times strong. You just can't domesticate that spider. When you hear about something like this to somebody like me, I'm like, oh, I want to invest in that company, but there's a disconnect here, right? This is not a public or even series 2. This is something that's still in the incubator kind of thing. There's nothing for those of us who want to get involved to do, is there?
No, you got to be careful with that stuff.
Okay.
Be really, really cautious. Yeah. I mean, these are early stage, pre-revenue, seed stage, this is venture capital, private equity, and it is the world of the term we use is accredited investors. Kelly talked about institutional, where these people literally have hundreds of millions, if not billions, such that they can lose their shirt on an investment and it doesn't matter. So I really want to be clear that time and time again, I've seen people bet the farm on a specific technology, something like hydrogen, back in 2000, or solar in 2007, 2008. And these things just tanked. People lost 90% of their money because they bet it all on one technology. So diversification is your friend. Balance is your friend. If it's pre-IPO, there's not a retail investor, there's not much you can do. And then even when it does go public, please be careful, think about it as a pie chart and be very clear about what percentage of your pie chart you want to allocate to any one specific technology.
Sounds good. And that's a very good point on the that's something I think a lot of people wonder about, but want to know more about as well, as risk aversion and value alignment. So I imagine that's something that they can also learn a little bit more about through your course, Tim. Okay, cool. So, and Kelly, a second lightning round question here for both of you, but we'll start with Kelly, is who do you read? Whose investment strategies do you guys learn from?
That's a great question. To be honest, I mostly read about current views on ESG investing. So I read Wall Street Journal, Bloomberg. I'm obsessed with everything Bloomberg about ESG, especially because they write the Bloomberg Green newsletter is great. I read Fortune, I read Forbes. I've read, now I'm gonna remember his name, the person who runs Sustainalytics now, Cannibals with Forks, Pilkington. This is so embarrassing, I can't remember the author's name, but I mostly keep up with current trends. And the greenwashing trend is an important one to watch. It's also interesting, I just want to call out for your viewers that the EU is now, again, regulating greenwashing. I think Deutsche Bank was just called out for their greenwashing of some ESG funds or other. So there is some hope there that regulators are going to step in and try to clean up the Greenwashers Act. So, but unfortunately, all I have to say is I read whatever the Bloomberg and Wall Street Journal says about ESG investors.
That's perfect. That's something I'm sure a lot of people want to hear or learn from. Tim, how about you?
Yeah, I mean, so it's kind of an interesting thing for me that everything that I've learned about ESG and sustainability a decade ago, doing that master's in Sweden, we're still catching up to that. So to me, I don't spend as much time, kind of chasing the latest trend and the newest thing and the next. I find there's just so much noise that really, I'll be honest, that my focus has been a lot more about taking these big ideas and distilling it down to something that, the average person who's never heard of this stuff can digest. So to me, it's really more what I would suggest. I think a lot of your readers and listeners probably know a lot about this stuff already on the green side, the environmental, the animal side of things. I would urge them to look at things like Canadian Couch Potato, which is just a very standard blog about couch potato investing, right? Like this is one of the most basic things of just like stocks, and there's nothing ethical about it at all. But again, we don't learn like basic financial literacy in high school. So, people like in the US, there's a woman named Tori Dunlop, who's like feminist investing. Here in Canada, one of my favorite people is Jessica Morehouse, where, just really like grassroots, simple, basic financial literacy, right? And that don't try to outsmart this thing. That, if you're trying to get into the investing game, it's like gambling, like you're trying to play online poker against people who've been playing online poker for decades. You're not going to beat them. Don't just learn the basics. And that to me, I think most people would be really well suited, just like getting their kind of financial house in order, the basics of like budgeting and cash flow planning and tax shelters and those basics. And then, bias for me, but obviously, follow me on YouTube or Twitter, or whatever, so that, once you have those basics, then you can understand how to do those things with that sustainability lens.
Very fair. That's very helpful and good advice. And you guys also did drop some really good resources there, even if it was unwittingly. So, okay, second last lightning round question before we let you guys go. Kelly, how do we know veganism is here to stay for investors?
Oh, I love this question. And the reason I know it's here to stay is that animal agriculture is literally unsustainable. I know, and I've said this before. We talk about freshwater use. Sorry, I hope you can still hear me. Lost an AirPod. Gotcha. The WHO has said that by 2025, 2/3 of the world will be living in water scarcity, that arable land is running out, that we cannot, as we all know about greenhouse gas emissions, and the greenhouse gas emissions from animal agriculture vary. But by some estimates, in fact, by the FAO's own estimate, enteric fermentation, just from cows, accounts for 30% of all greenhouse gas emissions. You have to kind of go through the data and figure this out. But the point is that the climate crisis has brought us to a point where we have to address this. And on top of the climate crisis, we have the natural resource crises. And so I think that we're at a point now where it's not just about animal welfare or human health, or it's best to not pollute rivers. It's actually that we're running out of land and water and breathable air, and air that's not too hot for us to sustain life on the planet. So I do think this is inevitable. From my perspective, it's just a matter of time and how much time. And the IPCC's report of this summer of just last month actually is pretty clear that we have 20 years to affect some very serious change. And so I'm hoping that COP26 helps bring additional attention to animal agriculture. It's a big hope. But the short answer to the question is that it's literal unsustainability, it's inefficiency. We can't keep using animals as middlemen. Feeding 77% of the world's calories to produce 18% of them just doesn't work anymore. It's horses and cars, it's new technology, it's economic efficiency, it's environmental efficiency, and it's necessity. So I'm pretty optimistic that necessity is going to win out.
I'm glad to hear that. I'm sure many people will. And it is really interesting to see some people will get caught up in the fact that vegetarian and veganism is so far behind the growth of the plant-based markets. But to me, that speaks to the fact that even though a lot of people have trouble jumping in both feet and saying 100%, there's a massive reducitarian movement going on out there that seems to be going nowhere, if not exploding. Tim, do you have anything to add there quickly before I hit you guys with the last question?
Yeah, just prices. I mean, I think right now we're in an election here in Canada, and the number one issue is cost of living. And, I think that food prices are going up, meat prices are going up. As these companies, the externalities that Kelly has said start to emerge within this industry, if they're going to treat their employees fairly, if they're going to treat the animals with dignity, the costs are going to go up rather dramatically. And, the easiest way to reduce demand for something is to raise the price. So I think that, as we start to hit, the term we use is sort of the walls of the funnel with unsustainability, that prices are going to continue to go up. Sadly, there's the sort of the equity issue here that, it's people with the lowest income who are going to be hit hardest by that. But, if there's one thing that's going to change behavior, it's increased prices. And we've already started to see that. Yeah,
very good point. And earlier we were talking about the cage-free commitments from the animal welfare side. Those things, like as companies that Kelly's pointing out are, feeling more and more pressure to inevitably change. Hopefully some of these externalities get priced in more, and we see more representative price of the products that drive so many of us bananas when we see how cheap some of this food is. All right, this has been fantastic. We've covered a lot of ground. My last question for you guys is, Bill Gates has said that we always overestimate the change that will occur in the next 2 years, but underestimate the change that will occur in the next 10. So what change do you guys think we're underestimating, and what change do you think we might be overestimating in the short versus long term? I'm gonna take it as a sign that this is a coin flip. How about Kelly, we start with you.
Sure, it's a great question. I think that we're underestimating consumers' capacity for change. And I'm just going to point out Tim's point that the best motivator for change is going to be money. Bloomberg wrote recently that we can't talk about, they didn't say these words exactly, but something along the lines of we can't talk about methane because of Americans, they were referring to, fondness for hamburgers. Well, people are going to be far less fond of Big Macs at $5 than they are going to be at 15. And that's just going to be the reality. So I think we're underestimating this, that we're overestimating their fondness for things. We're underestimating their capacity to change when the prices dictate that they do. As for what we're overestimating, I think we're overestimating the power of industry to kind of dig in their heels and prevent the subsidies from going away, to prevent consumer perceptions from shifting. I know that there was a beef checkoff program again in the States. They ran an ad in the Wall Street Journal that grossly misstated beef's emissions and just said beef is sustainable, it's healthy, we all need it. If all Americans gave it up, there'd be this tiny 0.2% change. And it was just nonsense. It's total nonsense. And I read that and I think, I know that this is incorrect. I know that someone needs to call out the Wall Street Journal for really publicizing false information that's actually dangerous. But to me, that says we've all been thinking that the industry will win and that they can just do these things and get away with it. My sense, it's not just my hope, but my real sense is that we will begin to see their power falter. And we've overestimated it so far.
Excellent answer. Sorry, thank you. How about Tim? How about you?
I mean, yeah, it's a real crystal ball question here, which I tend to avoid because I don't know the future. Who the heck knows? But hey, if it's a little game you're asking me, I'm happy to play along. That really, when I look ahead sort of a decade from now, I think that likely what people are underestimating right now is the generational change that is taking place. I think that when we look at economic power as well as political power, I think that the demographics of the baby boom generation have just given them so much power, and that's changing very, very, very quickly, right? And it has, and I think that people underestimate that there is sort of a bit of a status quo bias where we assume it's always going to be like this. And I'm really hopeful that, voting, we're going to see younger people voting more for politics with their dollars, with their investments, with all of that. And that I think that every industry is going to have to adapt to that generational change. In terms of the things that we're sort of overestimating, I think it really comes down to the ability to alter and to impact global supply chains. I think that the world economy right now is so complicated. Like, remember when we had that one ship in the what was it, the canal, like the Suez Canal or whatever, that got stuck, and it just like the whole thing like ground to a halt, and just like everything, like one sort of black swan event, right, just completely disrupted the entire global supply chain. How much food just rotted on the seas for that period. And so as we start to see these systemic risk events emerge, I think that the fragility of our global supply chain is going to become more apparent, which is going to lead to higher prices, for things that depend on that global supply chain. And that really this idea of reliability and resilience that can really come from local systems and local supply chains, all of a sudden, is going to become that much more valuable to us. I mean, someone can right now sort of go to Costco and buy things for a very cheap price that have been shipped around the world, probably multiple times before it ends up there, and you go to your local farmer's market, and, that same product can actually be 3 times the cost, even though it was grown, down the street. And I think that as those prices shift, and as we start to see more of these sort of global emergencies, or just frankly like disruptions in the global supply chain, I think people are really going to start to value local systems, especially in food, so much more. I think we really underestimate that right now.